In this video, I am going to show you a trading strategy that works in every time frame. No matter if you are day trader or swing trader, when you apply this trading strategy on your chart, you might not need anything else. Let's see our examples. So this is ESPR stock chart. So right now we are looking at a monthly chart. So first of all, I need you to pay attention to this 3 consecutive up candle. So I will define this area. So this 3 up candle represents 3 months. After trading for 3 months to the upside, it got rejected and took this liquidity here. At this moment, price was bearish and it started going up from this low, and price regained this green area that has lost previously. So what price did here was real manipulation. So how should we interpret this price movement? So price pushed for the last time and regained this level back. This movement is for sure institutional manipulation, because if price is still weak, it shouldn't regain the level that has lost previously. I will extend the green box. So what should be our expectation? If price ever comes back down to this green level that has lost previously, we should expect bounce from this box. But the real question is how you should set your target. If you are looking at a monthly chart, you need to go down to weekly chart. Let me clean the chart. So on a weekly chart, our target is this equal highs. Let's replay. As you can see, price came down to our level, took this sell side liquidity here, and now I expect price to bounce from this green box up until our weekly target. So if we take long from this box, our stop loss should be previous low, our entry is this green box, and our target is weekly equal highs. Let's play out. So price bounced from this green box and went directly to our weekly target. Initially we catch this move on a monthly chart and it gave us 100% profit. Another important point is we set our stop loss in this previous low. If your stop loss is tight somewhere here, it would increase your risk reward ratio, but this might cause losses because this is monthly chart. It is likely that your stop loss could hit if it was somewhere here. That's why we are making sure that we set our stop loss to the previous low. So let's clean the chart. I want you to pay attention to here. As you can see in this tight little range, price did the same move. First, it pushed down, grabbed this sell side liquidity here, then regained this little green box level. After testing this green box few times, it pushed price up. That's why in the beginning of this video, I said this strategy works in every time frame. For example, if you are day trader, you can go down to daily chart and look for such movement. If you catch one, you can set your target in a 4-hourly time frame. Or let's say you are scalper. If you catch such movement on an hourly chart, you can set your target on a 15-minute chart. And this strategy will work same as it was working on a monthly chart or weekly chart. So let me clean the chart. I want to show you something else. I will play the chart more and see what price is doing. As you can see, we came down and took this sell side liquidity right here. Here is very important. I will go to monthly chart. So this red down candle represents October month, which is our 4th quarterly opening month. I will define the opening level of this month, and I will go down to weekly chart again. Here you can see clearly, after this up candle, price pushed down, took this sell side liquidity here and regained this up candle level. So this is same strategy in a lower time frame that we saw on a monthly chart here. They manipulated price here, they pushed price down, took the sell side liquidity here and bounced from this low and regained this level again. This is a real institutional manipulation. They push price to the level where there are sell orders. By doing this, institutions will match their buy orders with feared sell orders. And as you remember, on a monthly chart, I defined this October monthly opening level, which is our 4th quarterly opening. And you can see here clearly how price is respecting this quarterly opening level and our green box. Let's replay and see. And price bounced from this level perfectly. Since we catch this movement on a weekly chart, you need to go to daily chart and set your target based on that. So if I expect bounce from this level on a weekly chart, my daily target should be this high. Because on a daily chart, I can see that clearly this is our specific high. And if price is making reversal from here, our first target should be this specific high on a daily chart. And this is how your setup should look like. Our stop loss is previous low, our entry is this box, and our target is this specific high on a daily chart. This was 75% up movement. So let's go to our next example. This is Adobe stock. We are looking at a monthly chart. So this red down candle is September month. Price pushed down and it started going up after this low. So usually you can define this as a bullish order block. So in such strong uptrend, price shouldn't lose this bullish order block level. But as you can see, after this high, price got rejected and lost this bullish order block level. I will extend this green box. So how you should interpret this price? So from this low, price can still go and continue its uptrend. This scenario is possible, but only with one condition. Price needs to stay above this green box. box. If it doesn't have enough momentum to stay above this green box, then this is a sign of weakness and we should expect drop from this level. And I will show you now one more trick for your confirmation. So this up candle is January, which is yearly and first quarterly opening level. I will define the opening level of this candle. As you can see from this low, price had a reversal and came up until this quarterly opening level. Retested here and started to drop. And this up candle is October quarterly opening level. I will also define the opening level. And this red down candle is April, which is second quarterly opening level. I will also define the opening level of this candle. And here we can see clearly how price couldn't stay above these quarterly opening levels and started going down. Let's go to our next example. This is Tencent holding stock chart. Again, we are looking at a monthly time frame. What I realize is here is specific low and here is our bearish order block. So in this green candle, price went up and lost this level drastically, grabbed this sell side liquidity below this specific low and had reversal from here. So origin of this down candle was this up candle. So price lost this area, but after making reversal from here, it regained the level that has lost previously. So my interpretation is if price was weak enough, it shouldn't come up here and regain the origin of this down movement. This is giving me the clear sign that this move was fake. They manipulated price here so that I will extend this box, and if price ever comes down here, I will expect bounce from this level. Let's replay. So price came down to our level. If we enter long from this box, we need to set our stop loss below this previous low, and we need to define our target on a weekly chart, which is this specific high. Let's replay the chart. So price hit our target perfectly. So this is also a great example why we set our stop loss below the specific low. Because if we keep our stop loss in a tight range, price would hit our stop loss, leave us out and bounce from here. That's why you make sure that you should set your stop loss below this previous low. So share your thoughts in the comment section if you find this useful. And if you enjoy, don't forget to like and subscribe. See you next time.